Welcome to Stribling's New York. I am your host, Rob Taub, on WORAM Radio, 710 on your digital dial, an iHeartMedia company. Stribling's New York is a show about business, culture, and people. We have a wide range of guests from authors, producers, actors, artists, restaurateurs, as well as, of course, most importantly, people from the world of real estate who will help you buy, sell, rent a home or apartment, and help you finance one. We have a wide range of guests today. Alan Swire, who is a documentary filmmaker and an author. Kathy Taub, who is my sister and in the top 10 brokers in New York City. Joe Nocera from the New York Times, who writes about sports and shares his opinion on business and many other things through his column and books. And Melissa Cohn, who's our first guest. And Melissa runs MC Home Loans. And if you need to reach Melissa, I'm going to say this before I forget later, call her at 844-667-7300. Welcome, Melissa.
Thanks, Rob. It's great to talk to you.
You know, I was thinking about something, so you know that this is a completely apolitical show, and we don't talk about politics at all, but I was watching everything last night, and Marco Rubio gave a speech where he bowed out, and I think if there was one kind of poignant moment, he was talking about how his parents came here in 1956, and they had worked as I think his father was a bartender and his mother had a similar kind of job, may have been a maid. But he said their greatest achievement and the thing that was most important to them was they bought a home. And I think we often take that for granted, how important that is just to the majority of Americans. And that just struck me as, so not to get you emotional or anything, but you are a pivotal cog in this process.
Well, that's my job, is to help people, purchase homes and get them at affordable rates and affordable payments so that they'll be able to have them for the rest of, their life. And what you say about home ownership is actually very important. Right now, about 65% of Americans own their own home. And it's home ownership which really helps build communities and have people dig roots and grow from there.
So, I mean, what do you break down a percentage of how many of your buyers are first timers or what, and foreign buyers, et cetera, do you have a spreadsheet on that? How do you approach this?
The answer is I could probably get that information out of my computer system, but luckily we've been
not
busy
asking
and
the
I
gotcha
haven't
question.
had time to do the research, but I will tell you that we do see more and more foreign purchasers coming into the marketplace, and many of them are first-time home buyers. They want to establish roots, and in some cases it's actually more beneficial to them financially for them to purchase here in the U.S., which has what we hope to be the most stable economy in the world, and people are finding that they're getting a better return on real estate, especially in the New York area. New York real estate has held up better than any other region in the country, and in fact, the economy's recovery has been led by real estate. New housing starts came out this morning. They were actually at 5.2%, which is pretty great.
Well, thinking now just off the top of my head about being when I was a first-time home buyer many, many years ago, things were different in New York. The really difficult aspect of co-ops were that many of them wanted all cash, and even some that were not what you'd call, super high-end buildings were still demanding 80% of the money, which maybe this was in 1990, and that's changed, I would think, now.
Oh, it's a whole new world, and in fact, yeah, there were many co-ops in the city that did demand all cash, and as the economy has changed and the markets have become more volatile, there are many buildings that are actually now allowing buyers to take financing for the first time.
So,
and in fact, there are buildings that are now even taking it to the next step, allowing buyers to buy in the name of an LLC so they can protect their privacy. And that's something that I've never seen in my 35-year career.
Well, I guess the advent of so many new condos are changing that. I have a question now about first-time buyers or newer buyers or anxious buyers, I'm working with somebody right now who you may know, and I'm
Yes,
trying
that's true.
to manage that as well as possible. How long is there an average to the process, or does it matter upon your credit rating and how much you're putting down? How do those things make it fluctuate?
Well, I mean, the first thing you have to do, especially when you're dealing with someone who's a first-time buyer, no matter what, is managing their expectations, especially in this post-TRID world. Because with the new disclosure regulations, you basically have to add in anywhere from a week to 2 weeks to the timing of the transaction. But on average, you can generally get a solid bank approval within 3 weeks. Some banks are faster, some are slower. You'll find that the banks that have the most competitive rates will obviously be the busiest and take more time to get approvals, and those with less aggressive rates their doors are wide open waiting for business. But the initial process in terms from a first-time home buyer, going from the initial conversation about their income, their assets, their credit, and the property they want to buy, it really generally can be anywhere from a 1 day to, say, a 5-day conversation. It just depends on how well prepared the buyer is with their own personal financial information. You'd actually be very surprised at how little some people know about themselves, and how little access they have to the actual details because they're so busy working. So if someone has all that information, we can generally get the process started, understand their credit, understand the building, and put them in a position to begin the actual process of an application within 2 days.
Is there a cutoff for like a credit rating? If somebody has too low a rating, are they just never going to get a mortgage, or are they just going to pay a higher rate?
The interest rate that you pay is definitely determined by your credit score, especially if you're going to one of the bigger banks and looking for a fixed rate. You'll find that anything below a 660 credit score will certainly increase your rate dramatically. You rarely see banks going down below, say, 620. I've seen them do that on occasion, but an interest rate could be a whole percentage point higher. Essentially, if your credit is over 700, then you can be comforted by the knowledge that you should be able to get a very competitive rate in today's market.
What's the highest credit rating you can have?
800 is the
800
highest.
is the
But
highest.
actually, I think it's 810. But I don't see 800 credit scores a lot. I recently have had a group of clients that had credit scores in the 780s and 790s, and that's really considered to be perfect credit in my eyes.
And, you mentioned something earlier, because it's just a personal thing, not to get into my own life too much, but I have a disputed hospital bill that I didn't want to pay. It was $200. So that's gone to, I guess, a collection agency or something like that, because we couldn't settle on it. It was a matter of principle for me. Does something like that affect one's credit rating? Or
It does. Those charge-offs, even though you didn't pay for a matter of principle, will hurt you financially when you go to look for a mortgage, because a charge-off or a collection account reduces your credit score by as much as 50 points.
Oh, my God.
My advice to all buyers, I know, right? So my advice to buyers is to, get over it and pay the $200, because it'll keep your credit score higher. And if your interest rate is 0.25% lower because you paid that collection account, you'll win back that $200 time and time again.
Oh, my God. This is the best advice I've ever gotten. Everybody make note of this.
Pay your bills.
I shouldn't have held that moral ground. I should have paid it. Darn it.
Don't worry, Rob, you're not alone. And a lot of people don't understand that what they think that they are doing is a matter of principle, or they're absolutely right and therefore they're not going to make that payment, will hurt them in the long run. I, for example, have a client now who was getting ready to sell a property, and the buyer kept postponing the closing. So instead of making the next month's payment, he simply didn't pay it. And now he has a 60-day mortgage late on his credit report in the past year, which makes it much harder to get financing.
Well, that's very good advice. So, and to change gears, where are we right now with interest rates?
That's a really good question, and that answer potentially will change again after 2 o'clock after the Fed makes its announcement. But generally, this 30-year fixed conforming loans under 625,000, the 30-year fixed rate is running at about 3.75%, and for a jumbo fix over that 625, the 30-year fixed today is really running probably at about 3.625%. It was at 3.5% solidly up until about 2 weeks ago, but as we started getting some stronger economic data, bond yields have gone up, and that's caused interest rates to have gone up. Rates have also been very tied to oil prices, and if we think, a month ago, a barrel of oil was at $28 a barrel, and today it's up at $37 a barrel, which is good for the oil producers, but higher oil means higher inflation, and that also pushes bond yields up and causing mortgage rates to go up as well.
So those gasoline rates and oil prices affect your middle-class buyers throughout the rest of the country.
It affects every buyer. When oil goes up, the stock market tends to go up, and they like that. When oil goes down, the stock market goes down. And in looking at mortgage rates, it's a very contrarian world. So when there's good news for the economy, it's bad news for mortgage rates.
Now, I just wanted to change gears again, selfishly, because I know somebody who's interested in a particular piece of property, a brownstone in New York that has what I believe to be a dual C of O, so it's commercial and residential. Does that affect?
That's a mixed-use property,
Yes.
and those rates are also affected. Mortgage rates are tied to various financial indices, so you will find that in the residential world, where our interest rates are tied more closely to the 10-year Treasury. If you're looking at a commercial property, your interest rates are tied to LIBOR. But LIBOR will go up and down with the prime rate and with the Fed. So if the Fed were to, and I hope they don't, announce a rate hike today, then LIBOR will go up, and therefore commercial mortgage rates will go up. It's really all in the hands of the Fed today.
So is the mixed-use building a more complicated mortgage, and are the rates going to be higher, or does it depend on the buyer also?
Well, of course it depends on the buyer. Everything depends on the buyer. If you have a super strong buyer, you'll be able to take advantage of the best possible rate. So if your income misses the ratio slightly, or you have a credit ding, that will affect your mortgage rates. Also, how much financing you want. If you want maximum financing, those rates tend to be higher than if you're willing to make a down payment of, say, 30% or more.
If somebody has substantial amount of capital and money behind them, but they just want to finance a lot on a brownstone, can they get 90% financing today?
The answer is no.
Okay. What's the maximum?
The only way, let's say you're buying a brownstone. I don't know what the price is. What should we call it? $4 million?
Let's say 6.
Okay, let's call it $6 million. For a super strong buyer, they would look to be able to get no more than 80% financing in the best of all worlds. In general, when people are looking at commercial loans, they look at the rental income that the property derives in order to consider how much financing that building would qualify for. But a super wealthy individual, there are banks that will allow them to use their own personal income. But, in general, on commercial at that level, you're probably looking at 70-75% financing unless you have other property or collateral to put up in order to get you more financing.
Now, do you see any other quirks or ticks or changes in the market that we should be looking for?
That's a really good question. I think that what we're seeing now is really fear of the Fed and that interest rates have been moving up. Adjustable rate mortgages were really stable until the beginning of this week, and over the course of, I'd say, the past week, adjustable rates with a number of banks have gone up by 0.25%. Adjustable rate mortgages have been, in many cases, our savior when a 30-year fix goes up, but an adjustable rate is 0.75% lower. Then that's a great alternative, especially in New York where home ownership is rampant, but the timeline of how long people stay in their homes is actually shorter than if they were to purchase a house in the suburbs.
So is that something you ask somebody then? Is like, how long are you going to plan on staying here? When's your next move going to be?
Absolutely. My very first question is, what are their intentions with this new home?
That's very important to know.
Is this a home for today, as many people in New York City have, because with the cost of real estate, and people have different life cycles. You get married, you need a 1-bedroom. You have children, you need a 2-bedroom. You have more children, you need a bigger apartment. And people in New York tend to buy for their current life cycle.
Well, that was very interesting information and very valuable, especially the personal stuff you gave me about my $200 charge that's going to cost me 50 points on my credit score.
Go make that payment today.
I'm running home to get my checkbook out. Thank you so much for joining us, Melissa Cohn from MC Home Loans, and I hope to have you back again soon.
Look forward to it.
Okay, bye.
Bye-bye.